I welcome you all to the video lecture on the topic payment banks. Reserve Bank of India introduced two new categories of banks into the Indian financial system in the year 2014. These two new categories of banks are known as payment banks and small banks. In our earlier lecture, we discussed about the first category of the bank, that is small banks. And now in this particular lecture, I am going to explain the second category of the banks, that is payment banks, which have been introduced by RBI since 2014. The main objective behind establishing these types of banks, the banks like payment banks and small banks, is to increase the drive of financial inclusion in the country. Payment banks is a new kind of bank which is having potential to reach the banking services up to the majority of unbanked and underbanked segment of the Indian population. These banks are such type of banks which can accept deposits up to certain limit. On 19th of August 2015, RBI has given approval to establish the small finance banks to certain selected entities in our country. Now, let us try to understand what is the concept of payment banks and how they are functioning in our country, what are the objectives and what are the importance of payment banks in order to increase the drive of financial inclusion in our developing country. As I mentioned initially in my lecture, the main intention of establishment of payment banks is to increase the drive of financial inclusion. In overall world, around 2 billion population have no access to various types of financial services which have been provided by financial institutions like banks, mutual funds and insurance companies. In India, the term financial inclusion was used first time in April 2005, and this particular word financial inclusion at the initial moment, first time it was mentioned in the annual policy of Reserve Bank of India in April 2005. This annual policy of Reserve Bank of India in 2005 was presented by Y. Venugopal Reddy, the then governor of Reserve Bank of India. The main purpose of setting up of payment bank is to enhance financial inclusion. Payment banks are new model of banks which have been prepared by the Reserve Bank of India. These banks cannot accept exceeding the limit of rupees 1 lakh. It means the payment banks are such type of banks, they can only accept restricted deposits. They can only accept the deposits and the limit of the deposits is up to 1 lakh rupees per customer. These banks cannot issue loans and credit cards to their customers. Both current account and saving account can be operated by such banks. It can also issue the important services like ATM cards, debit cards, online banking and mobile banking. In our country, Airtel is the first entity to launch payment banks in our country, and Paytm is the second such services to be launched in the country. In brief or in short, while defining the payment bank, we can say a payment bank is like any other bank operating on a small scale without involving any credit risk. In other words, the payment bank is such type of bank which can carry out most banking operations but can't offer advance loans or issue credit cards. In other words, new type of banks which are expected to reach customers mainly through mobile phones rather than traditional bank branches is known as payment banks. This is the simple definition of payment banks. In this way, in this initial part of this particular lecture, I explained in this introductory part the background of the payment banks. Now, after explaining the background of the payment bank, we will move towards the second part of this lecture, in which I am going to explain the history of the formation of payment banks. While studying the brief history of the establishment of payment banks, I would like to mention here the payment bank was established on the basis of the recommendation made by the Nachiket More Committee. The Reserve Bank of India on 23rd September 2013 appointed a committee under the chairmanship of Nachiket More. This committee is known as Nachiket More Committee. On 7th January 2014, the Nachiket More Committee, after a deep study of this financial inclusion, submitted its final report with its various recommendations. Then on 17th July 2014, on the basis of the recommendations given by Nachiket More Committee, the Reserve Bank of India issued guidelines for the payment banks. Then on 27th November 2014, RBI released its final guidelines for the payment banks. And as a result of these final guidelines, on 19th of August 2015, the RBI of India, Reserve Bank of India, given license to 8 different entities to launch payment banks. Initially, on 28th February 2015, means before giving license to these different entities, on 28th of February 2015, during the presentation of the budget, it was announced that Indian Post will use its largest network to run such type of payment banks in our country to disseminate or to expand the banking services to the general public of our country. And in order to expand these banking services to the unreached people or to unbanked persons of people of our bank, the post office can play a very important role. This is what mentioned in the budget speech on 20th February of 2015. So this is the brief history of the payment banks. On 19th of August 2015, RBI have given license to different entities. The most important some entities are Aditya Birla, Airtel Commerce Services, Department of Posts, National Security Deposits, Reliance Industries, Paytm, Vodafone M-Paisa. These are some entities who got the approval and license from Reserve Bank of India to run their payment banks. After understanding and discussing this brief history of payment banks, now we will move towards the next point where I would like to explain the features of payment banks. The very first feature I mentioned here of payment banks is that payment banks can accept demand deposits up to the limit of 1 lakh rupees per customer. The limit of accepting deposit from per customer is sealed at rupees 1 lakh. The next feature is payment banks, they must have to pay interest to their customers for their deposits, and this rate of interest is determined as per the notification and as it was notified by the Reserve Bank of India. The next feature is payment banks can issue debit cards, but they are not in a position to issue credit card to their customers. Another feature is that fourth one is that payment banks cannot engage in lending services. That is, they cannot provide any type of loans to their customers. And the next feature is the deposit up to rupees 1 lakh is ensured by the Deposit Insurance and Credit Guarantee Corporation, that is DICGC. The next feature is payment banks cannot involve in any kind of credit risk and can only invest in less than 1 year government securities or treasury bills. The next seventh function, or we can say the feature of the payment bank, is that payment bank will charge fee for as a commission from their customers. This is the sole earning, only way of earning for the banks. These payment banks earn their amount of profit out of this fee charge as the commission from the customers. The next one is one can open saving bank account or a current bank account with these payment banks. Then payment banks are allowed to transfer payment through any channel like branches, automated teller machines, business correspondents, etc. The mobile banking services can be accessed through these payment banks. And then internet banking, the facility of the internet banking services can also be provided by these payment banks. The payment bank applications can be used to make the utility bill payments for various bills, providing basic financial services. Means this payment bank can also involve in providing the basic financial services like access to mutual funds, insurance products, pension products, foreign exchange, and all other different type of financial services they can provide, but all these services depends upon the subject of the conditions and approval given by the Reserve Bank of India. The another important thing is that the payment banks cannot accept deposits from non-residential Indians, and then the payment banks, they are not allowed to set up their own subsidiaries for undertaking the non-banking financial services. And at last we can mention the last feature of the payment bank is that payment bank will also have to maintain cash reserve ratio just like other scheduled commercial banks. So in this way, these are some important functions, or we can say these are the features of payment banks. After discussing the functions and features of payment banks, at the last we are going to discuss the importance of payment banks. What sort of role these payment banks is playing for the purpose of financial inclusion, and what is the importance of the payment banks in our Indian economy. The very first thing is that the basic objective of the introduction of the payment bank in India is to enhance the financial inclusion for unbanked and underbanked population. The second point, while explaining the importance of payment banks, here we can mention the small business, unorganized sector, low income households, farm and migrant workers are largely benefited by the introduction of the payment banks. The next point of our importance is that the small amount of transactions, it is possible to use these payment banks for making the transactions of small amounts, or for the people who usually requires to making the transactions of small amounts, they can use these payment banks for making small transactions. The another point is that transfer cash benefits from government. It means payment banks may also become a mechanism through which the cash benefits from the government can reach to up to the ultimate beneficiaries. It means it is useful for transferring wages, subsidiaries, various government subsidies, or other social welfare schemes. Through these different schemes, it is possible for the government to transfer easily the amount of payment up to the beneficiaries using these payment banks. Another importance of the payment banks, we can mention the development of certain rural areas, unbanked areas. They will get the access of banking services, and due to the access of banking services, the development of these rural and detached areas can easily take place. It also increase competition among various financial institutions. Due to the increasing financial competitions among various financial institutions, among various banks, they would lead to the further improvement in the efficiency. Due to the increasing competition, the efficiency of the banking sector will definitely increase. The another important thing is that it also increases the saving habits of the individual, of the people, and these increasing saving habits of the people will definitely increase the investment in our country. So these are the importance. Apart from that, it also motivate other banks for using technological based services, offering technological based services to their customers, and to provide these services at the lower costs. As the payment banks are providing these services, other banks like commercial banks, private sector banks, they do get motivation from these payment banks to offer the technological based services to the customers at the lowest cost. In general, it is benefited to the common people, to the common public at large. And at last, the payment banks are allowed to invest in government securities only. Therefore, the risk factor is minimized in comparison to the other financial institutions. In this way, These are some points which explains. Through these points we can mention the importance of payment banks in our economy. The importance of payment bank as per as the expansion of banking services in our country is concerned. In this way, I stop here in this particular lecture on the topic payment banks. Thank you. Thank you very much.